Apartment construction has really picked up in the Twin Cities area, particularly in the urban core, just as rent growth levels have dropped off. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Minneapolis-St. Paul update. We are seeing historic levels of construction in the Minneapolis urban core, but let's start with the metro's overall construction numbers first. At the end of 2012, there were about 4,500 units underway. That is the most this market has seen in 6 years. And this is really interesting because unlike most of the Midwest, the Minneapolis-St. Paul economy has actually done pretty well over the past decade, and it's in good shape. But like most of the Midwest, we haven't seen a whole lot of new supply relative to the size of this market. But what makes the current construction number more notable is that so much of it is concentrated in the urban core. And it's been decades since we've seen this much activity in those areas. Here is the construction numbers by submarket, and you can see a huge block is underway in downtown Minneapolis University, 2,064 units, with much more in the pipeline. Another 770 units in uptown St. Louis Park, which is another urban core submarket that neighbors downtown just to the west. And the only other submarket with more than 400 units under construction is on the other side of the Twin Cities, Central St. Paul, which is their urban core submarket, and there are 534 units under construction there. And of course, this follows the national trend, which is that apartment developers tend to be targeting urban core neighborhoods, trying to reach those higher income Gen Y renters. So what effect is all this construction having on the apartment market? Well, it's hard to say. Occupancy is still tight, and rent growth levels are easing, but you can't really blame it on the construction numbers. Let's start with the occupancy story, coming in very strong at 96.8%. That is down 80 basis points in the quarter due to some seasonality, but still tight everywhere, topping 95% in every submarket and every product age group. And that's true where there is a lot of construction going on as well. 97.9 in downtown Minneapolis University, 97.5 in uptown St. Louis Park, and 96.4 in central St. Paul. And here's a chart showing annual rent growth by quarter in the Twin Cities. You can see that sharp drop off. Rent growth got as high as 6% in the second half of 2011, but it's been easing since then. And that was unusually high for the Twin Cities metro. This is usually a 2 to 4% annual rent growth market, even when vacancies are very, very few. We like to say, only half jokingly, that rent growth is typically minimal here just because people tend to be so nice and they're too nice to raise rents very much. Now, as of Q4 2012, annual rent growth came in at just 1.9% year over year. And I point out that niceness factor because you really can't blame any of the typical things I might look at. Obviously, the economy has been strong here. Vacancies are few across the board. And in the spots where there isn't a whole lot of construction, even there we've seen a decline in rent growth. So that doesn't appear to be a supply issue either. Only 2 submarkets reached 3% rent growth in 2012, and they were 2 urban core areas. 3.2% growth in uptown St. Louis Park and 3.1% in central St. Paul. And downtown Minneapolis, by the way, just topped the metro norm at 2.1%. So what's going to be the story for 2013? Well, occupancy is likely to ease some due to all that supply coming in the urban core. But aside from downtown Minneapolis, those construction numbers are actually fairly manageable, so it should not be a big problem. And because of that, we think that Minneapolis-St. Paul should actually see somewhat better rent growth in 2013. And that wraps us up for the Twin Cities. So until next time, for Apartment Market Dynamics at MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.